the stock market trap that takes away the Chinese people's deposits. Recently, China's stock market has been volatile. On the evening of October 20th, 23 Shanghai and Shenzhen listed companies issued announcements that they would use the bank loans they receive for stock repurchases or share purchases. A senior accountant from the mainland warned that this was a trap. The CCP used the stock market to extract deposits from ordinary people in order to achieve this year's GDP growth target. On the evening of October 20th, 23 Shanghai and Shenzhen listed companies issued announcements stating that they had signed loan agreements with banks and would obtain bank loan quotas, which would be used for the company's stock repurchase and share purchase plans. The 23 companies, including Sinopec, China Merchants Shekou, Sinotrans, Costco Shipping Energy, and Costco Shipping Development, applied for a total of nearly 11.5 billion yuan in repurchase and share purchase loans. Among them, Sinopec signed a credit agreement with the Bank of China and obtained a loan of nearly 900 million yuan for share repurchases. China Merchants Shekou obtained a loan of 702 million yuan from China Merchants Bank to support share repurchases, etc. On the same day, Zhejiang Securities in the mainland announced that the stock market's downward trend since the 8th had ended. There is a high probability that the market will rebound at the same level on the daily line against the 3,674-point decline trend in the future. Analysis: China's stock market surge and stop are artificially manipulated by the CCP. However, Ms. Yu, a senior accountant in the mainland, is not optimistic about the new wave of the stock market becoming a so-called bull market and warns that there is a trap behind it. On October 21st, Ms. Yu told the Epoch Times that the recent surge and stop in China's stock market is artificially manipulated by the CCP. The Chinese stock market is a scam, but many ordinary people can't see the trap like outsiders. We inside the system also know that the government is now using the stock market to siphon off people's deposits in order to achieve the 5% GDP growth target. She said, now it's the fourth quarter, and they see that the GDP target of about 5% set by the top leader this year cannot be achieved. What should they do? The economy is not good, real estate is not good, and the three major drivers of GDP growth, investment, consumption, and exports, have all stalled. They've calculated the people's deposits. They think that the people have money in their pockets, but they haven't taken it out to spend. So they thought of some tricks. Asking the people to take out their money, stir up the stock market, and then GDP can increase a little. According to data from the People's Bank of China, as of the end of 2021, the total amount of deposits of Chinese residents reached 10.3 trillion yuan. The mainland's Oriental Red Asset Management released the Equity Strategy Outlook for the fourth quarter of 2024, showing that the current deposit balance of Chinese residents has increased from 10.3 trillion to 14.7 trillion. Ms. Yu said, so recently, including the top leaders, the central bank, the Ministry of Finance, etc., have come forward to endorse the stock market, saying that the first phase will invest 500 billion incremental funds into the stock market, and another 500 billion will be invested in the future to deceive the people into entering the stock market, but in fact, they did not really take out the money all at once, but just gradually took it out bit by bit. The CCP launched a rescue policy to deceive millions of new stock investors into rushing into the market. On September 24th, the People's Bank of China announced a series of heavyweight monetary easing policies, including a sharp reduction in the interest rate range and the injection of 1 trillion yuan of liquidity into the financial system. On September 26th, the Politburo of the Communist Party of China held a meeting and promised to deploy necessary fiscal expenditures to achieve this year's economic growth target of about 5%, and admitted that there are new problems in the economy. From the 24th to the 28th, the stock market soared for 5 consecutive working days. The Shanghai Composite Index rose from around 2,700 points to 3,200 points, up 25% in 5 days of trading. 200 million retail investors believed the CCP's so-called bull market propaganda and entered the market, including millions of new stock investors. During the National Day holiday, the A-share market was closed for 7 days. Many brokerages gave up their vacations and started working overtime to provide 24-hour account opening and consulting services for stock investors. A couple in Yantai, Shandong, said on social media that they were optimistic about this wave of market conditions and invested the 1 million yuan they had just raised and the funds they were preparing to use to pay off their mortgage into the stock market on October 8th. A netizen said on Douyin, "A big brother is too crazy. He has several villas, a dozen shops, leverage, and more than 100 million in cash. On October 8th, he invested all of it in the stock market. He lost 60% in a few days. The whole person is numb." It is reported that millions of new stockholders opened accounts mainly online, and the main account holders were born in the 1990s and 2000s, with some born in the 1980s. On October 8th, the first day after the National Day holiday, the stock market soared again. The Shanghai Composite Index opened 337.9 points higher, up more than 10%. Only 20 minutes after the opening, the turnover of the Shanghai and Shenzhen stock markets exceeded 1 trillion yuan, setting a record for the fastest trillion yuan turnover in history. The total turnover of the two markets on that day reached 3.45 trillion yuan. However, after the A-share market experienced a sharp rise for 6 consecutive trading days, it plummeted for several consecutive days on October 9th, and retail investors suffered heavy losses. Ms. Yu said, "Under the party-state system, Chinese people only know how to chase profits and money. There are no other investment projects now, and many people are unemployed and have no source of income. They can't see that the Chinese stock market is a scam, so they are eager for quick success and are willing to sell their houses and take out loans in the hope of making a fortune in the stock market, but they are trapped." The CCP released new measures to save the market, and Chinese and Hong Kong stocks closed down across the board. On October 17th, the Ministry of Housing and Urban-Rural Development of the CCP once again released new measures to save the housing market, including a promise to nearly double the loan amount for unfinished residential projects, unfinished buildings, to 4 trillion yuan. But the three major A-share indexes closed down across the board that day, with the Shanghai Composite Index falling below the 3,200-point mark. Many real estate stocks plummeted by more than 20%. Hong Kong stocks also closed down collectively, with the Hang Seng Index falling below 20,000 points during the session. Ms. Yu said, "The stock market is still going up and down, and the government, as soon as it sees a decline, comes out and shouts, issuing some new regulations and measures, and continues to fool the people. Nowadays, older people are generally more experienced and will not easily invest their money. But young people don't understand. Once the government shouts, they will still invest money in it." But many securities firms and executives of listed companies know the actual situation in China. So these young people foolishly even borrowed money to push up the stock market. Those executives and securities firms took the opportunity to sell their stocks, get out of the predicament, and take out the money, so the stock market fell again. Just as millions of new stock investors rushed into the market, from September 24th to October 11th, 172 listed companies issued announcements of reducing their holdings, and a large amount of funds was withdrawn from the stock market. Li Daxiao, former chief economist of a securities firm, revealed to Southern Weekend that China's A-shares market was built on the pennies of 210 million retail investors. Ms. Yu said, "The Chinese stock market does not follow market rules or economic rules. In the past few days, A-shares generally rose in the morning and fell in the afternoon. This is to extract deposits from the middle class, because the central government has no money now and local governments have no money either. The stock market has been sluggish for a long time. The government has repeatedly stimulated people's consumption to promote internal circulation and boost the economy, but private consumption has been constantly downgraded.